Good evening, everyone. Welcome to Hit the Bid here on November 9th. This is Ty Robbie here through Week 45 Market Watch. Today we're going to run through our charts and see what happened across the markets in the last week and get ready for any opportunities waiting for us as we head into Week 45. So let's jump right in here and get started. As always, we got our December live cattle on the board to start us off. Last week was another tough week here in the cattle market as both feeder and fat prices continued to slip. We did see here on this December live contract prices opening up on Monday with a nice quiet inside day, looking like we had some pressure up here near these prior week's highs. However, we did see that on Tuesday there was a nice little bull trap getting laid as we did see a nice little poke above these prior day highs as prices neared 233. But the bears stepped right in here and got the ball rolling lower as prices did break here on Tuesday, leading into a nice limit down day here on Wednesday as well. Prices were able to settle up late in the week with Thursday and Friday's action coming in about a $5 range between 218 and 223. At the moment, this is looking like a decent long-term support spot as this market did pull right back here into this 200-day moving average. The 200-day is a typical long-term support spot that we can usually look for the bulls to try and step in and offer support. That's exactly what we kind of saw late last week with Thursday and Friday's action just being parked right on top of it. As we head into next week, though, we are going to be using Thursday's low and Friday's high as our pivot points. Bids above 223 are what the bulls are going to need to get any chance at some upside from here. At the moment, we do have this downtrend intact here with these major moving averages now crossing under each other, and these declining averages really going to be putting pressure on price if we do see a pullback up into this area. So the bulls will have their work cut out for them if we do get some bids above 223. We could see a nice little rally up here coming back towards these declining moving averages, but we do have plenty of supply overhead here in this 227 to 233 area. Pretty wide zone, but all the way up here to this 50-day moving average and to those prior week's lows, that prior Friday's low is going to be a pretty tough spot to chew through. We do have lots of supply overhead, so we expect to see the bears step in and sell into any rallies from here. This market does have a lot of work to do before we can turn this thing back around and get a new uptrend back on track. So I encourage everyone to remain defensive and remain cautious here as we head into next week. Any rallies here above 223 are expected to be sold into. It's just a nice little bounce there off that 200-day moving averages. 200-day moving average. We're going to need to see some more structure and support here before we commit to any new long positions. So in the meantime, remain defensive and let the bears kind of continue to sort this mess out. If we do head into next week and we do get continued offers down here below 218, we could see this thing continue to accelerate and push down here towards the low $2 range. 210 would be on deck if we do get some offers down here below 218. We should see this live cattle market continue to flush down here towards 210. That'll be the first stop from there, and then we just will have to keep our eyes on this $2 mark if we do get an accelerated push down here below 218. In the meantime, though, looking like we're seeing some decent support. We want to see how this market acts as we open up for week 45. We did have a Trump tweet going into the weekend regarding packing plants, so that's something that we could see some more volatility about as we head into the new week. So we just want to encourage everyone to remain cautious. This is a decent little spot here that we are going to be seeing long-term support like we saw late last week at that 200-day moving average, but don't be committed or don't get married to this position yet. We still have a lot of work to do before the bulls can take this thing back out and head back towards those highs or get a new uptrend intact. This market's going to need some time to chew up and chew up this recent supply and create a little bit of structure here to trade around before we can look for any more upside. Remain defensive and look for this market to continue bleeding lower. Next up, January feeders also seeing some pretty significant downside last week. Prices opening up on Monday with a nice little quiet day here before that gap open on Tuesday was sold into. Prices breaking down, leading into a limit down day here on Wednesday as well. Prices did settle up here like those live cattle did right around this 200-day moving average, offering some long-term support after a pretty significant breakdown off of these recent highs. This market is showing a little bit of bounce action here. However, the volatility still remains elevated, and like those live cattle, we still aren't out of the woods yet. If the bulls are able to get some bids above 322.5 here this week, we could see a nice little rally up here towards these prior supply zones and these declining moving averages. Bulls will have their work cut out for them. There's a lot of supply to chew through, so this thing isn't going to be an easy climb out of here. We're going to need to see some balance action, some more balance action in this market to create a little bit of structure to trade around before we can climb back out of here. We got a lot of work to do before we can get another uptrend back on track. So in the meantime, we encourage everyone to remain defensive and cautious as this downtrend is rolling. Bears remain strong here at the moment. If we do get continued offers down here below Friday's low at 314, look for this thing to continue flushing down here towards the $3 mark. That'll be the next stop lower on this for this feeder market as prices continue to take heavy fire. Like I said with that live cattle market as well. Trump tweet on Friday regarding the packing plants could add some volatility as we head into next week. So keep an eye on these pivot lines, and whichever way we trade from here is going to offer the next leg. If we do go up from here, we do have plenty of resistance of overhead, so look for rallies to be sold into. The bulls, like I said, have a lot of work to do before they can turn this thing back up towards these recent highs or get back into an uptrend. So rallies will be short-lived, and we should see the bears continue to add some more selling pressure to this cattle market. Next up, our December corn futures. The last couple of weeks has been pretty choppy action as prices have remained sticky right around this 430 mark on this December corn futures. On these December corn futures, prices have just kind of been balancing out here between 426 and 437 over the last 2 weeks. If we look here on our intraday charts, we can just see a nice back and forth action for about 10 days straight here. We do have these equal week lows are down here between 426 and 427, so that's going to be a key level to keep an eye on. At the moment, this market has shown a nice little breakout above some key levels here, filling that gap, looking like we might get an uptrend. However, the bulls have just been pretty stagnant here, and with Friday's finish down here near these prior week lows, looking like the bears could be getting ready to push this thing back down here into the low fours. Multi-week lows with a lot of inventory trapped up here over the last 2 weeks suggests if we do get some offers down here below 426, we could see this thing start to flush back down here towards the 420 to 410 mark. This corn market has just been really choppy and really sticky here. Prices seem to be comfortable down here in the low $4 range, so we don't expect any major breaks by any means, but if we do start to trade back down here below 426, this market will need to see if the bulls are going to offer support at that 50-day moving average. But if they don't, we should just see a nice slow drift back down here towards the 410 to 420 marks. Bulls need to see this thing rally back up here towards these prior week range highs and get a confirmation close up here above 437 before we can consider any more upside. In the meantime, until we trade beyond either one of these edges, look for this thing to keep on chopping sideways near the 430 mark. Last week, we did see crude oil prices slowly drift lower throughout the first 4 days of the week. Monday's action opened up here just shy of that 50-day moving average and saw that selling pressure throughout the first 4 days of the week. Prices did briefly undercut that prior week's low on Thursday as prices did dip down there towards 59. However, prices just have really liked the $60 mark, snapping right back up in here before seeing a nice little inside day on Friday right around that $60 mark as well. At the moment, this market needs to get confirmation closed down here below 59.5, and we should see this thing continue to start bleeding lower again and working back down here towards these mid-50s. However, price does look pretty sticky here right around the $60 mark. This is a pretty comfortable spot for oil prices, so we could see continued chop, kind of like we saw last week. A nice slow bleed, but this market isn't really in a hurry to go anywhere. The downtrend still remains intact, and we expect to see the bears keep on pushing lower, or at least down here towards the mid-50s again. But at the moment, they don't look to be in a huge hurry. We could see some pretty choppy action here. If we do get a close back above this bull pivot here, 61.50, a close above that high from last week and that 50-day moving average could open the door back here to the mid-60s. However, the upside will remain limited. Oil prices, like I said, have been pretty sticky and choppy recently, a lot like that corn market. So if we do get a break back here above 61.5, we don't see a lot of upside to come from here, but we could see this thing just continue to bounce range bound between the $61.5 and $65 mark. Look for prices to remain sticky in this oil market, or just keep the slow bleed going if we get some offers down here below 59.5. Next up, our equity markets showing a pretty nice dip buying opportunity last week. Pretty steady pullback all week long as prices did just make a nice steady grind lower all week long. Prices here on Friday showing a little bit of weakness early, briefly undercutting that 50-day moving average, which kind of spooked some people, probably shaking out some loose leaves down here with that probe of that 50-day moving average. Really strong rally here into the close on Friday, looking like we saw a pretty good bounce here. This long wick down here undercutting that 50-day moving average with that strong close, just setting up for a really nice rally into next week. As we can see here in the Sunday night open, these futures are already opening higher and showing some upside, up about 46 points here on this S&P contract. Look for the bulls to get aggressive here this week and start rallying back up here towards these all-time highs. Bulls want to see S&P 7,000, so that's going to be the next stop for them, as this dip is going to be a good buying opportunity here. Look for some deals out there. This pullback to the 50 is something that we haven't had much opportunities over the last 6 to 7 months here. So this is a good deep value area to start picking up some deals. Look for some stocks to buy here. This market should continue rallying into year end. The market still remains very strong and healthy. This looks like a really good dip buying opportunity. Be looking for deals early this week, and we should see some higher prices continue by the end of the week across each of these indexes. Nasdaq seeing also another probe of that 50-day average here as well with a nice rally, showing tech sector, so had a nice little bounce there. Dow stocks just briefly poking that 50-day average, not really able to get back below it, but once again a nice strong close here into the end of the day on Friday with a nice strong weekly close. Look for bulls to continue rallying here above this 20-day moving average. Each of our indexes are showing a pretty good dip buying opportunity here with this pullback to that 50-day average. We expect to see these prices climb out of here and start heading back towards those all-time highs. That's all we got for this evening. Thank you everyone for tuning in. We'll catch you guys tomorrow night for closing comments.